Hey everyone, welcome to the KE Report and a company update from Vizsla Silver, chatting with the president and CEO, Mike Konnert. Mike and I are going to be talking about the feasibility study that was just released for the Panuco Project. That was released yesterday, November 12th, and the numbers, I guess in a way, unsurprisingly, are really good. This is clearly a tier one asset here. Running through some of the high level numbers, using base case gold price at $3,100 and silver at $35.50. We have an after tax NPV of $1.8 billion. That's US. After tax IRR 111%. This all feeds into an all in sustaining cost of right around $10 per ounce silver equivalent for the life of mine. So, Mike, look, let's just open the floor to you. Give us a quick rundown of what you want to highlight within this feasibility study early on here, please.
Yeah, this is, truly incredible. These numbers are spectacular, and it's unlike anything I've ever seen. And our broader team has never seen a feasibility like this before. And you know, the NPV is incredible. The IRR triple digit is incredible. But if you look at what's driving that, I think the low capex is really what's so incredible here. So we have a capex now of $238 million after net pre-production revenue that's actually sub 200 million at $173 million. The payback is in 7 months. And that results in an over 7 times NPV to CapEx ratio, which is, I think, an important metric to look at here when comparing this project and others and just looking at the ROI that we see here, which is truly spectacular. And, if you look at this in terms of AISC as well, it's bottom quartile AISC at just over, it's $10.61 an ounce over the life of mine. So really quite spectacular. And there is a large amount of conservatism baked into this with the reserve calculation that we used of, on an NSR basis using $28.50 silver and $2,300 gold. So that's what we did our January 2025 MRE at. So there's, upside even just in the reserve itself if you look at a higher NSR value. But this is very conservative in terms of metal price on the NSR. So I would say that, what the market is missing here is that we only use 12.8 million tons of our global resource of about 25 million tons. In that, there's a large amount of inferred that obviously we didn't convert to measured and indicated, but we believe that we can convert a fair portion of that going forward. Some of that inferred is even, areas that we'll mine through to get to more reserve. So low-hanging fruit on growth through, call it near mine expansion and reserve conversion, as well as other structures like La Luisa that are very close, 500 meters away from Napoleon, that really could either be as good or better than Napoleon itself. So this, yes, is a snapshot of a 10-year mine life, but we believe that this is a multi-decade mining opportunity here. This is just a snapshot in time of what we see here.
Okay, Mike, let's dive into some of those points, starting with those initial capital costs. As you said, you even start making some early on money here. So that $238.7 million of pre-production capital does get dissipated throughout early startup. Sustaining capital, $287.3 million. You've already raised, I believe, all the money you need to fund this thing. Where do you stand cash-wise to take on those just headline pre-production capital costs of $238 million?
So we have 2 times our capex covered right now. So we have $200 million US in the bank, another $220 million facility with Macquarie to fund the capex, plus about $40 million US in equities that we hold, primarily Vizsla royalty, which is the vast majority of that funding through equities. So we're very well covered. And, people might ask, well, why do you need that much money? Well, first of all, we want to stay in a position of strength here. So it's important not to be underfunded. We don't believe that there's going to be any change or, Capex blowout or anything like that. We've done the study is based on real, actual, actionable quotes from contractors. All of the real input numbers go into this feasibility. It's our, final feasibility before going into production. So, we don't expect any negative variance on that Capex. But the other reason that we have that amount of capital is to continue to grow, and this is a catalyst-rich growth story. And the way that we've grown organically in the past has been through drilling, and that's exactly what we're doing. We have drill bays in the underground to continue to convert inferred and find more resources near mine, as well as drill La Luisa and other areas and make new discoveries slightly further afield, like continuing to drill the Animas vein there. So, this is a high growth story. It's not one that we publish a feasibility and then all exploration falls away and we just build the mine. We actually endeavor to have a larger reserve by the time we're actually in commercial production. So this is really exciting for us.
So, Mike, on that point, then, because you do have so much drilling, would this be potentially even a hub and spoke model later on through the mine life once you've already generated all kinds of cash from really what's around where you'll build the mine? With all this other exploration, do you use potentially other deposits to just further feed that mine life?
I think that's true with areas like La Luisa, which we've already discovered, and there's a small, about 40 million ounce resource on that. Beyond La Luisa, I think there's a number of other veins, even to the west of La Luisa, like San Jac and San Victor, that we like. We've also been doing fence drilling across the district, finding, subsurface veins. So that's pretty exciting. I think that, that will, I wouldn't necessarily call that a hub and spoke in that sense. That's feeding the kind of original mine, and it's all part of that near mine exploration and discovery. But where you might see that hub and spoke model, or actually more likely in my mind is perhaps another mill, would be in the center to the east portion of the district where the Animas is. And that's actually where the historic production has been in the district. So we know there's a lot left there. We're going to continue to grow this district. And then beyond that, where we also see another project perhaps generating shortly is the Santa Fe mine to the south, where there's a permanent operating mill, a small production profile. We've done aggressive mapping down there. We're going to continue to explore that concession. I expect there to be a lot of success in exploration at Santa Fe. So if you fast forward, our goal is to get to 50 million ounces of annual production in 10 years. I think we can do that organically with our properties here. And I think you see a lot of that growth coming from the central portion of the district and from Santa Fe.
Okay, back to kind of the cost associated with this, the sustaining capital of 287.3 million. Can you walk us through when these costs come up, if there are any big chunks? And I guess it seems kind of silly to ask, but it does seem like it would be self-funded.
Yeah, exactly. And those costs are primarily around mining. So, this is an underground mine, so you do need to mine ahead and make sure that you're sufficiently covered with the underground development. So that's really the majority of sustaining capital. There's not really any massive chunky expansion costs or anything like that. And that's because we've engineered the mill to be, ready for a higher throughput going forward.
All right, let's talk sensitivities. You have three tables in the release. You've already talked about the lower side sensitivities of how this project still makes money at much lower metals prices. But the amount of money this makes at even higher metals prices is just even more astronomical. So talk us through some of the sensitivities and where the upside simply is at current metals prices.
Well, at current metal prices, I would say the upside is really quite incredible. It's a cash flow machine. But what I think is important to touch on first is on the downside. So if you look at the 50% downside sensitivity there, you see that even at drastically lower prices, we're seeing an NPV and an IRR that's in line with what people would consider world-class, for a silver project. So we're at $17 silver, 17 sub $18 silver, and 15.50 gold. We see a 460 million NPV, which again would be a 2x NPV to Capex ratio, and then an IRR of 42%. I've seen a lot of studies that are great studies on great projects have those metrics as well. So, not trying to knock any other groups, but I think this does speak to the robustness of this project, but also speaks to the downside being protected. On the upside case, silver of 53.25 and gold of just north of 4,600, we see a three over $3 billion NPV and 165% post-tax IRR, both those numbers post-tax. I'm a firm believer that what we're seeing now is early for gold and silver prices. By the time we're in production, I think this project only gets better and better beyond these prices here. So it truly is world class, and I think world class because the downside is protected where it can operate in all metal prices environments, and all metal price environments, I should say. But it has just almost unbridled upside on positive, price sensitivity.
So, Mike, give us the lay of the land of when you can put a shovel in the ground, how long this will take to get built, all tied in with permits. We just saw Silver Tiger get their open pit permits in Mexico, first open pit permits in years to be released in Mexico. What does your permitting landscape look like? And when you do get those permits, how quickly can you be into production?
Well, as soon as we're granted our permits, we're ready to break ground and go. That was the purpose of having this money raised before the feasibility study. It's the purpose of doing the feasibility and the engineering that we've done so far. The test mine's almost at ore level right now. So we'll be ready to go as soon as those permits are granted. Now, in terms of when that happens, we're still guiding towards the midpoint of next year. I think that's a very reasonable time frame given, the bullish news we've seen out of Silver Tiger. I happen to know that, you know, permits like ours are, I think about how best to say this, but we're confident in what we've applied for here. And big reason for that has to do with, sensible water use. Most of that comes from underground and existing sources there on the project. This has always been an underground mine. It always continued to be an underground mine. So, that's relatively easier to permit in Mexico. And we have, great community support as well. So we're very excited about seeing that news out of Silver Tiger. I happen to know that there's other private off radar companies that on Friday received permits as well. So we're going to continue to see permits being granted, I believe, in Mexico, and certainly Vizsla is, it's done everything in our power to be ready for that, and I expect positive news on that front coming here in the months ahead.
So, on the growth side of things, as you said, you can bring some of the more global resources into the mine plan if you drill those off and improve the confidence. Plus, you're drilling in all these other areas to build out resources, even make new discoveries. What does the roadmap look like for that? Take us through just how much you're drilling now and when you foresee being able to maybe issue updated resources that could either show there's more resources that could be brought into a mine plan or upgrade those inferred ounces.
So we do have a goal of adding to the reserve. I shouldn't say, what our internal goal is, but I think the market will be happy, by the time we're in commercial production that we'd have an upgrade in the amount of reserves that we have. And then as far as new discoveries, we do have 4 rigs on site. We're focusing on, yes, of course, the near mine work, but further afield like Animas, and then beyond that at Luisa. So this is going to be a major theme for us going into 2026 and beyond. So consider, the construction period, the work period that we're doing on project number one on the mine that we describe in the feasibility study to be complemented by very aggressive exploration. I'd be disappointed if we were spending less than $20 million a year on exploration, as we go into production.
Mike, what about growing the overall size of production? This already seems like a fairly sizable mine just through this feasibility, but since you have all these other resources, and since this seems to make money, well, a lot of money right here, could you increase the overall production size per year?
Well, yes, and just to frame that as well, this still be a top three in terms of production output, top three silver primary mine in the world, not just Mexico, but in the world. So this is one of the very large silver producers. Impressive considering it's underground, and I think that speaks to the grade of the deposit here. But we do want to continue to grow, and we do want to hit that 50 million ounce annual production profile in 10 years. But yes, if we find more material, say at La Luisa, or deeper drilling at Napoleon, or further extent at Copala, which we're all quite confident in those the possibilities around that, you could certainly see the throughput be expanded and the annual production rate from Panuco grow as well. But it certainly is one of the largest out there.
All right, let's speak valuations then, because these numbers, even as we outlined just at the base case, US dollar $1.8 billion. Your current market cap in Canadian dollars is about $2 billion. So discount that for the exchange rate. Talk to us about how investors should view the market cap, where you stand now, to the feasibility study results, I guess tying in also some of the growth opportunities.
Yeah, absolutely. And so, I think one way to look at it, there's a number of ways to look at it, but today we're at just over a half a billion, 1.5 billion, pardon me, US market cap. So we're trading at a discount to our NPV. Now, of course, when analysts value these companies, they create a net asset value, and that includes what the project's worth, probably more relevant metal prices. It gives upside for exploration, and things like that. But our enterprise value is certainly, of course, less than the market cap if you subtract cash. So we're trading at a serious discount from, if you look at market cap to NPV alone. But if you look at NAV based on analysts, I think we're probably trading on consensus around half of our net asset value based on the analyst consensus. If that's the case, that we're trading 50% off of where we likely should be, and that's based on what we've seen by peer companies that no longer exist, the Meg Silvers of the world, the Silvercrest of the world. Oftentimes, those companies would trade at NAV or at a premium to NAV, which we saw with Silvercrest prior to production. So I think we're grossly undervalued here, and there's a huge re-rating potential in the future here as we get closer and closer to production. Again, the funding's been done. We have the cash to do that, so that risk is gone. And really, what we need to see here is permits, but that's become, I think, very positive recently with the Silver Tiger news. And I would be surprised to see Vizsla trading at NAV or a premium to NAV as we appreciate into cash flow and into construction here. So that is to say, there could potentially be a double in the stock based on those metrics.
So, Mike, let's talk risk factors then, because look, permits, that was probably a major risk factor as we're waiting for some open pit permits to be issued in Mexico. They're starting to come in. Who knows what that flow is going to be like? You already have the funding to build this thing. You have, I believe, built out your team so that you can go ahead and start building this asset. So, where are some of the risk factors moving forward for investors?
Yeah, I think I can speak to the risks and how we've mitigated them. The risk, of course, is underground mining is challenging. It's anyone who says that it's going to be easy, he probably hasn't done too much of it. And there's always surprises. But the way we mitigated that risk is by starting a test mine and having it operating for the better part of the 20 year of 2025, and certainly will continue into 2026 as we start construction. So that risk is mitigated by advancing development and underground mining as soon as you can, which we've done. And we also have done an incredible amount of geotech drilling, which supports the fact that we have excellent ground conditions here, and that the mine should be relatively straightforward. So the other risk around underground mining is your ability to feed a hungry mill. And that's mitigated by the advance that we've done on the test mine here, and getting underground as fast as we can, as well as the goal of stockpiling material above surface. That's going to be very important. I think, anyone who's operating in Mexico would probably be remiss in talking about, security risks in Mexico. All over Mexico, not just Sinaloa, but Sonora and Durango and Zacatecas, and these areas that are considered kind of blue chip mining jurisdictions in Mexico, all have to deal with a certain level of insecurity that occurs in Mexico, but we mitigate that by having a very strong security apparatus, and we've done a great job with that at the project here. Beyond that, risks that you would look at would be financing risk. I think that's been removed, mitigated by the fact that we've raised and we have on hand effectively 2x our Capex in financing capacity, which is very important. And then technical risk beyond the mining, I think having Simon Smirlik, who previous to joining Vizsla was the chief operating officer and effectively running Ausenco, building mines like this all over the world, including Las Chispas for Silvercrest. I think that speaks to our technical capability when it comes to mine building. And then if I were thinking about other risk as an equity holder, of course I am an equity holder. I'm the founder of the company, so as the first equity holder, I'd be thinking about, well, where does the growth come from? Is this just going to be one mine, 10-year mine life? Okay, well, when it's in production, then the cash flow starts, but the reserve starts to be depleted as daily mining occurs. So the risk in terms of growth is, is this company going to continue to grow? And of course, we are looking to that. We started to mitigate that risk by consolidating, beyond the original district, and now have 40,000 hectares, starting at about 6,500 hectares 5 or 6 years ago. We now have 40,000 hectares, mostly contiguous ground to this project that we believe is a premier silver and gold belt that we're going to continue to make discoveries on and build out the production profile. And then beyond that, we can look to other inorganic ways to grow as well as we hit cash flow. So, our vision is to grow this again into a 50 million ounce per annum silver equivalent producer in the next 10 years. And I think that speaks to our mitigating the growth risk there.
So, Mike, to put you on the spot here, would you even field a takeover offer for the company if you're fully cashed up? This thing should churn out money once you start production. You can use this as your cash vehicle to go out and make other acquisitions if you want, or discoveries, rather than, I guess, selling this project, this company, and maybe starting up a whole other project. So, I guess on the back half of this, is this even a takeover candidate?
Well, I think whenever you put out a feasibility study like this, it becomes a very topical company for all corporate development teams that are in this subsector of our industry. However, we don't see full value in the company yet. We're working very hard to surface that for our shareholders. And like I said, we're trading at around zero point 0.5 times NAV, which, we know that our peers, our companies that have gone before us and have since been acquired, were acquired at a multiple of 1.8 times NAV. So we're trading at less than a third of that. So we're nowhere near full value. And for that reason, primarily there's I mean, I shouldn't say primarily, but for that reason, there's no incentive for us to sell this now. Beyond that, we are, relatively young and aggressive team that we don't want to sell this and just kick back. We see that this is a incredible cornerstone asset that can fund growth and build the next Pan American, build the next major silver mining company. A lot of those companies started with assets, good assets, scrappy assets with small production profiles and, small cash flow. This type of asset could grow into a company that's much, much bigger, and, a $2 million or $2 billion market cap would seem, tiny compared to what's possible here. So we're not incentivized to sell this at this point here. I don't think we're anywhere close to a valuation where we'd consider that, but I don't think that stops groups from looking at us. But we've done a very good job of protecting ourselves from any hostile situations or things like that.
All right, Mike, we'll wrap it up here. Another note is that the company will be hosting a webcast on November 24th at 10 a.m. Pacific time. That's 1 p.m. Eastern time. I'll post a link for you to register for that webcast. If you have any questions for Mike and his team in the meantime, please email me, fleck@kereport.com. I'll get Mike to address those, also follow up on any other news that comes. But Mike, big stepping stone for the company. And again, just further showing the profitability of this asset in Mexico. So thank you very much for taking the time and addressing the questions on the feasibility study.
Thank you very much, Corey.